Hi crypto fans, welcome to CCS Cryptocurrency State. My name is Santiago, I'm a web developer and investor. In today's video we are going to review and understand the 5 most important charts that you need to follow in this bull market. This video will help you to predict almost the peak of the next bull market, and you need to see it until the end because it's the combination of all the charts that I will show you that will help you to not lose profits on this bull market. Before we begin, please like the video, subscribe to the channel, click the bell to get the notifications, and leave me a comment. Did you know about these charts that I'm showing you in the video? What is your strategy to catch the peak of the bull market? Without anything else, let's go into it. Hey guys, the first chart that I want to show you is the stock to flow model. Many of you maybe already are familiar with the chart, but I want to explain if new people came into the video. The model trades Bitcoin as comparable to commodities like gold and silver. These are known as store of value commodities because they retain the value over long time frames due to the relative scarcity. The stock to flow ratios are used to evaluate the current stock of a commodity, the total amount of the currently available, against the flow of new production, amount mined that specific year. And because Bitcoin is also mined, like an example like gold and silver, that's why this model was created in 2019. Because the comparison is correct also. A higher ratio indicates that the commodity is increasingly scarce and therefore more valuable as a store of value. On the above chart, price is overlaid on top of the stock to flow ratio line. That will be this line over the chart. We can see that the price has continued to follow the stock to flow of Bitcoin over time. The theory, therefore, suggests that we can project where price may go by observing the projected stock to flow line, which can be calculated as we know the approximate mining schedule of future Bitcoin mining. One important thing to remember here is that the stock to flow line on this chart incorporates a 365-day average into the model to smooth out the changes caused in the market by the halving events like we have the last year. That's why that incorporation makes the line smoothly. If you are not familiar with technical analysis, moving average and other stuff, the thing that you need to understand here is the color palette. Usually the blue zone and the purple zone are the buy opportunities in the market according to this stock to flow model, and then we have move into the red orange. It's like a middle term on a bull market, and we usually are passing this metric of the line of the stock to flow model, and then we have our peak in the yellow and greens like you can see on the bull market of 2013 and 2017. So right now this chart is up to date, and right now we are just touching the oranges on the color. We are not even in the red zones here, passing for the orange into the yellows. So we can expect to start increasing in value and change the color from orange to yellow. And we will retain the information that once we pass the line for this bull market, we are going to enter probably into a zone of greens. So that will be your first hitch on this. When you see this chart and we are in the green color, that will imply that we are getting into the top of the bull market. You can see the significance of this chart also around here, that when change the average of this situation, we enter into the color red on this line on the chart. Every time that we enter into that line, leave us into the bull market situation. Anyways, you can have, like it was in 2013, a situation like this, that you pass from orange, you continue going down to more accumulation zone, and there enter into a period of the greens. That will also be the case if we can totally see that situation when we pick a little more, but we are completely overextended right now. We can see a 30% retracement into the price and then enter into our bull market phase. This is the first chart. Let's go into the second chart. The second chart is the 200-week moving average heat map. The 200-week moving average have been predicting accurately all the bottoms on the market. After we have a bull market, we usually have a period of 2 or 3 years of bear market, and usually we always come back and touch the 200 weekly moving. That happened across the history of Bitcoin, like you see here in the chart, 3 and 4 times already. Sometimes we have weeks lower than that, but usually, and in 2020 we have a close candle below that level, but usually that always serves as a support. So these charts show you in a color palette also the distance between the 200 weekly moving average, and that predicts like each month it will put a dot into the chart, and if we get into the yellows and reds, that will usually indicate the peak of that bull market. We right now are in the greens, and this is the zone that I think we are, maybe here or here. You need to pay attention to this, that the distance between the yellows and the reds, or the oranges and the reds, could significant like 100%. So usually you are going to sell your position in Bitcoin when we hit a red dot. Also, the difference between this dot, for example, at the next one, it was 100%. So this will give you approximately a good time to sell your and take profits on the bull market, but will not tell you exactly which is the best price. But anyways, anytime that you sell on the red dot, you will have a lot of profit over the cycle market. Let's go into the third chart. The third indicator is the Pi cycle top indicator. The Pi cycle top indicator has historically been effective in picking out the timing of the market cycle height to within 3 days. So this predicts the 3 days of the peak market. It uses the 111-day moving average and a newly created multiple of the 350-day moving average. So for the past 3 market cycles, when the 111 DMA moves up and close the 350 DMA X2, we see that it coincides with the price of Bitcoin peaking. It is also interesting to note that the 350 divided 111 is 3.153, which is very close to the P. 3.142. In fact, it's the closest that we can get to pi when dividing 350 by another whole number. The mathematics are incredible here. So basically, if you want to understand this in the chart, this will mean that when the orange line crosses the green line, we are 3 days out of the peak of the market. That happens here in 2011, happens also here in 2013, and in 2017. And right now we are at this point that the two lines are very close one each other. Let me zoom a little bit here. This is the bull market of 2017, and look how this is the moment that we cross the orange line into the green line, and after that it was all the bearish market. And even that we are right now here, and you look at this and it seems that it's very close to pass the green line. This also, if the market goes a little go down, this will retrace, and probably you can have even weeks or months to this to properly cross the green line. but this indicator has been always exactly with the situation of getting the peak of the markets, and it's also a very important mathematical indicator here. So this will give you a 3-day accuracy on the top of the market in this bull market. Let's go into the next chart. This chart is the Bitcoin logarithmic growth curves. You can see this chart also in other places like the rainbow chart. Basically it's all based on the Fibonacci numbers and extensions. You trace the line over all the peaks of the previous bull markets and all the lowest of the bear markets. And using the Fibonacci numbers and extensions, you will have this middle line that when we are over this, we are already officially in a bull market. And these Fibonacci extensions also will show you how each market it's longer and longer in time. So this will also say that not all cycles will be of a 4-year cycle. And if we zoom here into the chart right now, this was at the peak of 2017, and this is where we are right now. And even if this looks like it's not too much, the peak right now, if we just go into a straight line without any retracement, it will be at the peak at the $100,000. But probably this will be smoothly, and when the time pass on, the number will increase on this. This doesn't mean that we cannot have a peak out of this prediction. Remember, this is a predictive chart, but right now the top of the market, it will be in around $100,000 for Bitcoin. And our last chart is the Bitcoin investor tool, the 2-year moving average multiplier. This indicator uses the 2-year moving average and also a multiplication of that moving average line, the 2-year moving average per 5x. Buying Bitcoin when price drops below the 2-year moving average, the green line, has historically generated outstanding returns. Selling Bitcoin when price goes above the 2-year moving average 5x, the red line, has been historically effective for taking profits. And how you can see here, every time that we are up of this red line, has been a good moment to sell the position in Bitcoin. And when we are below the green section, it's a good place to buy. One good thing of this indicator is imagine that you miss the opportunity to get the peak. Always that we break the red zone to go in below, it's also a good place to sell a position on Bitcoin. Each time that has been, even if it's not the peak, a good place to sell. In the last bull market, that will be at approximately $14,000. And even if you misses the peak, still it was an amazing time to sell your position and get into the green zone after and rebuy. So this tool will help you also to understand when to sell once the peak has passed. To finish the video, I want to show you the chart right now. This is monthly candles, and look how was the last bull run comparing what we see right now. This was the $20,000 market, and we are right now into the 57,000. I'm thinking, comparing with the last bull market, that we are in this zone. We are getting into the extended RSI zone of over 90 right now. Our conversion into the stock RSI, it's already closing here. So I think we may have a red month after this, and did enter into our parabolic bull market zone. Look how we are overextended from 30 $2,000, and we are now in the $57,000. So that's something that I could expect, some retracement until the $40,000, maybe one red candle month, and then something similar to here, like a 2x or 3x in the market. That would probably be something that is possible to happen this time. Well, that's it all for today. Before I leave, please leave me a comment about the indicators and charts that I show you. Anything that you want to comment me about that. Any question also, I will check it and answer it. And please, before leave, like the video, subscribe to the channel, and click the bell to get a notification. That is for today. Thank you, and see you in the next video.